You think inflation is a modern problem, something that started with central banks and paper money. Think again, inflation is ancient, it's as old as power, as old as control. And it began the very moment money was created. Most people believe inflation belongs to our world, a world of governments, printing presses, and complex economics. But the truth is, inflation existed thousands of years ago, long before economists even had a name for it. The story of inflation isn't just about numbers on a screen. It's a story about human nature, power, and trust. To understand this, we need to understand the nature of money itself. Money isn't value. It represents value. From its very beginning, money has depended on one fragile thing: trust. And as history shows, trust can always be stretched. The first act of inflation didn't involve paper, it involved metal. Rulers would take a silver coin, melt it down, and mix it with a cheaper metal like copper. They'd then mint new coins that looked identical but contained less silver. They could produce more coins from the same amount of precious metal, but each coin was worth less. At first, people didn't notice. But eventually, they always did. Look at the Roman Empire. Over centuries, their silver coins, like the denarius, slowly lost their purity. Each emperor, desperate to fund massive armies and maintain their grip on power, diluted the value of the currency a little more. What happened? Prices for everyday goods began to rise. A loaf of bread that cost 1 coin now cost 2, then 10, then 100. Trust in the currency and in the empire itself began to crumble. This raises a crucial question. If the debasement of money was so obvious, why did people accept it? Why didn't they just refuse these worthless coins? We'll get to the full answer in a bit, but it's a key part of the puzzle. The simple reason is that people had no alternative. Taxes had to be paid in the official, debased currency. Soldiers demanded their payment in it. Markets, by order of the authorities, had to accept it. Inflation wasn't just a market phenomenon. It was enforced by the very power structure it was designed to support. Refusing the currency meant defying the emperor, and that was not a safe position to be in. This is a profound psychological effect. When people realize their money is losing value every day, their behavior changes. They rush to spend it as quickly as possible. Why save money that will be worthless tomorrow? People start hoarding real goods, food, tools, land. Trust shifts away from the abstract idea of money and back to tangible assets. This is a pattern we see again and again throughout history. And here's the secret. Inflation is rarely an accident. It serves the interests of those in power. For a ruler or a state with massive debts, inflation is a magical tool. The debt, fixed in nominal terms, becomes easier and easier to repay with the devalued currency. It allows states to fund projects, wars, and their own survival, hiding the true cost from the public. It's a silent tax. This cycle repeated itself endlessly. From the fall of Rome to medieval kingdoms and sprawling empires, the story was the same. The methods changed from clipping the edges of coins to printing paper money, but the result was always a loss of value. So, let's return to that question. Why did people accept it? The deeper answer is that refusal meant exclusion. If you rejected the official currency, you were cut off from the system. You couldn't participate in major trade, you couldn't pay your taxes and get the state's protection, and ultimately, you couldn't survive within that society. Acceptance wasn't a choice, it was a necessity. As money lost its integrity, people were forced to redefine what wealth meant. It wasn't about accumulating coins anymore. Real wealth became land, food stores, or gold assets that couldn't be easily debased by a ruler. Money became a temporary tool for immediate exchange, not a reliable store of value. And when inflation accelerated, as it often did, it destabilized entire societies. History is filled with examples of riots over the price of bread, widespread shortages as producers refused to sell for worthless money, and eventually, the collapse of political order. Hyperinflation isn't just an economic event. It's a social and political catastrophe. Ironically, while high inflation could destroy a state, a moderate, controlled inflation often strengthened it. It centralized control over the economy, made tax collection more efficient in real terms, and provided the funds needed for military expansion. In many ways, the power of the modern state was built on its ability to manage and manipulate its currency. Today's inflation, with its complex financial instruments and global central banks, feels different, but the underlying logic is ancient. The tools have changed from a Roman mint to a digital printing press, but the game of power and trust remains the same. The most dangerous thing about inflation is that it erodes trust slowly, almost invisibly. It's not an instant shock, it's a gradual decay. People get used to prices rising a little bit each year. it becomes normal. But underneath, the foundation of social and economic confidence is being eaten away until one day it suddenly disappears. Every society in history that relied on controlled currency believed it could manage inflation. Every single one of them thought, this time it's different, we have better tools, we're smarter. And history shows that none of them fully succeeded in the long run. The temptation to create more money to solve short-term problems is just too powerful. This leads to the biggest misconception of all. We tend to treat inflation as a policy mistake, a bug in the system that can be fixed with the right adjustments. But what if it's not a bug? What if it's a feature, a built-in characteristic of any monetary system based on centralized power and control? Ultimately, inflation exists because the power to control money exists. As long as a central authority can create money without restraint, that money will always, eventually, lose its value. It's a fundamental law of political and economic gravity. So, why is inflation older than you think? Because it began the moment money met power. The moment one person or one institution gained the ability to create and control the medium of exchange for everyone else. The real question we should be asking is not how we can stop inflation. It's whether any system that centralizes control over money can ever truly escape it. Thanks for watching, and if this gave you a new perspective, be sure to subscribe for more.